Towards the end of 2018, you mentioned that you guarantee you could make a 50% annual return if you had to start again with under $1 million. The question is, what method or methods would you use to achieve that return? Would it involve flipping through 20,000 pages of Moody's manual or similar publications?
Yep.
Or would it be hunting for great companies at a fair price as Mr. Munger would? Or would it be a combination of both, with opportunity cost serving as the final arbiter of which method to use, given that your investing opportunity has now broadened significantly?
Have you ever wondered how one of the greatest investors of all time, Warren Buffett, would approach investing if he had to start all over again, but this time with just $100,000 in his pocket? Would he stick to his tried and true methods, or would he adopt new strategies given the challenges of today's fast-paced, tech-driven markets? In this video, we'll explore exactly how the Oracle of Omaha might navigate the stock market today, starting from scratch with a relatively modest sum. Could he still achieve the same remarkable returns he's known for? Or would the game look different with such a smaller pool of capital? Stick around, because we're about to uncover the time-tested strategies Buffett would use if he had to rebuild his empire with just $100K, and how his 2024 insights could offer some fresh wisdom for today's investors. If you're trying to figure out how to make smart investments with a smaller budget, or just want to understand how the greatest investor of our era would approach the market today, this is the video for you. Buckle up as we dive into how Warren Buffett might handle this challenge in today's market. And if you haven't, consider subscribing to our channel and liking the video. It confirms to YouTube that you want to see more of my videos appear on your homepage. Warren Buffett once mentioned that if he had to start from scratch with less than $1 million, he could easily make a 50% annual return. But how would that approach differ if we lowered the amount to $100,000 in today's market?
The answer would be, in my particular case, it would be going through the 20,000 pages. And since we were talking about railroads, I went through the Moody's Transportation Manual a couple of times. That was 1,500 or 2,000 pages, or probably 1,500 pages. And I found all kinds of interesting things when I was 50 or when I was 20 or 21. And I don't imagine there's anybody here that knows about the Green Bay and Western Railroad Company, but there were hundreds and hundreds of railroad companies, and I like to read about every one of them.
In 2024, Buffett's strategies have evolved alongside the changing financial landscape. One significant move was reducing Berkshire Hathaway's Apple holdings by nearly 50%. This reduction in such a lucrative tech giant signals Buffett's caution about overvaluation and the increased speculation in the technology sector, where market prices may not reflect real value. Instead, Buffett is building a formidable cash reserve, now totaling a staggering $277 billion. This war chest isn't just idle cash. It's part of his strategy to remain liquid and ready to capitalize on market downturns, a principle that's been crucial to his success over the decades. If Buffett had $100,000 today, his approach would likely involve keeping a significant portion of it in cash, patiently waiting for opportunities during periods of market volatility. With current markets showing more casino-like behavior than when Buffett was younger, his caution emphasizes the importance of avoiding reckless bets and instead seizing undervalued opportunities during periods of panic. Moreover, Buffett's increasing investment in energy companies, particularly Occidental Petroleum, highlights his belief in future-focused industries, especially those tied to essential resources like energy. This reflects his preference for sectors with long-term potential, such as oil and gas, that provide reliable cash flow and stability. His long-term view remains consistent: invest in solid industries where demand will endure. For someone starting with $100,000, Buffett's wisdom would likely focus on patience, liquidity, and diversification. The key is to stay clear of speculative ventures and focus on businesses with strong fundamentals and industries that are poised for growth over time. So it's not just about picking stocks. It's about knowing when to act, staying disciplined, and having a deep understanding of the industries you're investing in.
The Green Bay and Western, in those days, everybody had a nickname for for railroads. I mean, that was just what Northern Pacific was the nipper, and Phoebe Snow was one of them in the East that used to go up to Cornell, and the Green Band Western was known as grab baggage and walk, and GB&W, and they had a bond that was actually the common stock, and they had a common stock that was actually a bond, and that could lead to unusual things, but they wouldn't lead to unusual things that would work for you with many millions of dollars. But if you collected a whole bunch of those, which I set out to do, and actually that's what impressed Charlie when I first met him, because I knew all the details of all these little companies on the West Coast that he thought I would never have heard of. But I knew about the Los Angeles Athletic Club or whatever it might be, and he thought he was the only one that knew about that, and that became an instant point of connection. So, to answer your question, I don't know what the equivalent of Moody's manuals or anything would be now, but I would try and know everything about everything small, and I would find something. And with $1 million, you could earn 50% a year. But
Buffett's 2024 portfolio also teaches us to focus on companies with strong fundamentals. His continued investments in Coca-Cola and American Express underscore the importance of brands with strong market positions, consistent cash flows, and durable competitive advantages. These companies have stood the test of time, showing resilience through various economic cycles. If Buffett had $100,000 today, he would still apply this principle, carefully seeking out businesses with a proven track record. Whether in energy, finance, or consumer goods, he would look for businesses that are not only undervalued, but also possess an economic moat, a term he often uses to describe companies with lasting competitive advantages like strong branding, pricing power, or customer loyalty. In addition to his famous investments in Coca-Cola and American Express, Buffett's recent focus on energy companies, such as his large stakes in Occidental Petroleum, reflects his belief in sectors poised for future growth. Despite the temptation to chase high-growth tech stocks, Buffett stays true to his value investing roots, prioritizing companies that generate stable earnings, even if that means holding cash while waiting for the right opportunity. As he often says, it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. This philosophy still holds true in 2024. Even with $100,000, Buffett would prioritize businesses with solid fundamentals, preferring to patiently wait for value rather than following market trends or speculative investments. Buffett believes that research, patience, and a strong grasp of a company's fundamentals are the keys to long-term success in the stock market.
you can't just be in love with the money. You really got to just find it like essentially like, people find other things in other fields because they just love looking for it. A biologist looks for something because they want to find something. And that's built into. I don't know how the human brain works that much, and I don't think anybody understands too well how the human brain works. But there's different people that just find it exciting to expand their knowledge in a given area. I know great bridge players. I know great chess players. Actually, Kasparov came to Omaha and met Mrs. B. I've had the luck of meeting a lot of people that are unbelievably smart in their own arena and do some unbelievably dumb things in other areas. So all I know is the human brain is complicated, but it does its best when you find out what your brain is really suited for, and then you just pound the hell out of it from that point. And that's what I would be doing if I had a small amount of money and I wanted to make 50% a year. But I also wanted to just play the game, and you can't do it if you don't find the game of interest, whether it's bridge or whatever it may be, chess, or this case, finding securities that are undervalued. But it sounds to me like you're on the right track. I mean, anybody that'll come all the way to this annual meeting has got something in their mind other than bridge or chess. So I'm glad you came, and come again next year.
Ultimately, Warren Buffett's approach to investing in 2024 remains firmly rooted in the importance of passion. If he had $100,000 to invest today, his advice would not center solely on chasing immediate returns or getting caught up in market trends. Instead, he would encourage you to discover an area that genuinely interests you, be it bridge, chess, or, most importantly, finding undervalued securities. Buffett believes that the human brain operates best when engaged with something you love. By becoming an expert in your chosen field, you can make more informed decisions and remain resilient through market fluctuations. His philosophy emphasizes the importance of patience. Investing is a long game that requires thoughtful consideration rather than impulsive actions. So, stay diversified. Avoid the hype that often clouds judgment, and focus on investing in businesses you truly believe in. By aligning your investments with your passions, you not only set yourself up for potential financial success, but also cultivate a more fulfilling and enriching journey along the way. So, there you have it. Warren Buffett's timeless wisdom with a modern twist. Whether you're starting with $100,000 or $1 million, the principles remain the same. Stay patient, stay informed, and always be ready for the next opportunity. Let us know in the comments, what would you do if you had $100K to invest today?